Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates, and I am very late on this Wednesday, the 24th of January, 2018. We're approaching 5:40 p.m., so we've been here all day. What I was working on all day was the, if you will, the webinars I'm putting together. I tossed one of the pieces of one of these webinar software products. It's just too hard for most people. So I've got a new one that I'm trying out in the morning, and yes, I used one that worked great before, but like everything, they get so expensive and we're paying for that. It costs a lot, and I want to get something easy that makes doing these more often logical. So I'm just about there. Have I got the formats laid out? Yeah, I've got everything there. So it's just a question of picking the final piece of the puzzle and then getting it out to everybody in an easy way. I want it to be both browser and you can download both versions. Okay. So one of the things I don't trust are major market events. And if you've watched me at all, one of the things I teach you is chart action is based on knowns in large part. Yes, anticipation, but if you can't grab a handle on things, it gets dangerous. To me, a dangerous event is right in front of us. Number one, we've got the European Central Bank. These are not in orders of importance. But I cannot imagine that Mr. Draghi's going to come into the report tomorrow when the bank monetary policy is set and then he has a press conference and do anything to talk up the euro from here. This market has gone up dramatically now in front of his meeting. We'll find out what he does. Danger? Yeah, you don't know what he's going to say. The second part is Davos. The president is now leaving. He will be meeting with a lot of people, all heads of state. Many of his cabinet members are in Davos, and we saw today, I don't know if it was a snafu, I don't know if it was loose lips saying ships, I don't know if it was meant to be or not be. Here's what I know. The vast majority of the president's cabinet are not lifetime politicians. They are businessmen, and they often speak what they think. That's how they became, in many cases, multimillionaires and billionaires. And in the process, Steve Mnuchin said that, hey, you know, a lower dollar is not bad for America. It helps trade. That differs from what so many prior Treasury secretaries have said, the theme being they may think that, and I believe they did and do, but I think that they're academics in the past. Now you get a businessman, he says, hey, you want to take it down? It didn't change our economy. You're going to help U.S. trade. So what happened on that is the dollar dropped like a rock, down 90 points. You took off in the euro. It's down 8.5 tonight. You took off in the Swissy dramatically. And the British pound is just looking at all these things in Davos, and it's getting a bid. And you'll say why. And it's because so many of the heads of countries that are there from the Eurozone don't want to see everything fall apart. Yes, there are some of the hawks, but you're getting the other stories too, and that is helping any way you cut it. The drop in the dollar sent all the metals breaking out to the upside. So when we look at the gold chart for the week, you're now up at midweek $23, and the market's gone from $12.45 over $100 higher. When I take a look at how the market is going in a straight lines from $12.46, now $120 higher on closes. This is just closes only on a daily basis. When I look here, if you'll recall, I sent you out price counts, and the price counts called that this market had a first count, second count. It was entrenched in a bull trend until certain events happened. Those events have not stopped this. This market is on a run to the upside. Did it maybe get ahead of itself today with this monster move? What was the move attributed to? A world event, Mr. Mnuchin's comment. Yes, Press Secretary Sarah Huckabee Sanders came out and she was trying to smooth things out, but
I think he said what he meant. And I don't know that it's a snafu. Again, I love that we have businessmen in place and not career politicians, and things get said differently, and it's a breath of fresh air to me. And I look at it because it's the reality. So the gold did soar on it, and why? Inflation thinking. Low dollar, you can buy more things with it. World economy's firing on 8 of 8 cylinders in many cases. So the inflation thinking, it seems to be grabbing hold. And, you know, the gold, that's an element it hasn't had for years. When we take a look at the pattern, you've certainly got the higher lows, the higher highs. You had a small consolidation right back here. This was the consolidation in looking back. You had the lower highs, the higher lows. Once it broke out over that, in looking back at it, it just took off, and it hasn't stopped at this point, okay? What else we have is a market that had a bullish crossover back here, and I did point that out. And I said, you've given this market another impetus to the upside. And what it's done is this is the first time it's gotten over an upper Bollinger Band and closed over it since back here in November, which was more of a sideways pattern. This is no sideways pattern. This is a market that way back under here decided to start and gallop up, as you know, and it's, like I said, up $120 on closes from that break low. So on pullbacks, and I don't expect it to have ease of staying over the upper Bollinger Band unless we hear more comments that we're not ready for. You got to remember, this is a big world stage in Davos, and that's what's going on. In terms of slow stochastics, are we embedded? Well, if you take a look with tonight's action, and it's not a close, both numbers are over 80. They were not over that yesterday. So the answer is no. However, I did point out that you have to take a look also at times at the GDL, and I'll show you that in a minute. Bitcoin, well off those crazy lows under 10,000, but not that far, $1,140, just how the pattern's going. We'll be having a lot more information on cryptocurrency soon. More important to me right now is the gold-silver ratio, which I said, watch out, and the market has come down. Up thrust is gone. I've got to take now this line and draw it here. I needed to be certain that this wasn't a fluke. It isn't. You're now in the down thrust. So while I've got this on the chart, it has changed. Here is the chart, the GLD. I hope I didn't say GDL. Sometimes I screw them up. You have the embedded reading. Look at 3 days. Both numbers here are over the 80, both over 80, both over 80. And I pointed out yesterday, I said, sometimes these ETFs lead the futures. That's what I think went on. Admittedly, you're over the upper Bollinger Band. Yeah. The odds of staying over it are 5% of the time, and no, I have never recommended that I can recall. It doesn't mean I'm right in what I'm saying. Getting long over or short under a Bollinger Band. It's not what I teach. If you take a look at the lower low, the higher high. Not a trend in GDX, but here too, the bias is certainly to the upside. Getting overbought, not an embedded reading, and not leading the charge. What led the charge is the GLD. There's been a switch in it. In the silver market, wow. I just want you to come right here with me. And this was Monday. Today's only Wednesday, right? We're already looking at Thursday night trade. Look at this sideways action, and you collapse into the lower Bollinger Band. We still have now, in theory, resistance at the 100-day average and the 18. If you take out this number, watch out, because you've then spun around, and I don't know where you can go other than if you clear this, maybe you can get to the upper Bollinger Band. This is what you did today. That low to today's high was almost $1. It's monstrous, any way you want to cut it. $1, $5,000 for a 5,000-ounce contract. Unbelievable. Overbought. I think the market is making a statement that it sees something. It's over the 200-day average, and it's going to get people looking at it. I don't know if it'll follow through or not, but it's going to get lookers. In the copper, you did the same thing. You hit a washout number to the lower Bollinger Band, and let's come here. Let's go to Monday. The market's trying to come down. I would look for support here. If that gives ground, maybe the 100-day average. You are oversold. Don't know if you'll follow through, but you're starting to push out the Bollinger Bands out of this bit of a sideways action that it had. You come snapping back yesterday and tonight. Difficult time, and again, that's one of the reasons that I often tell people in front of major reports like the two I just mentioned, you got to be careful. In the platinum, lower low, higher high, but you kept the embedded reading the whole time. Can the metals give this all up 1, 2, 3? You bet they can do that, okay? But they haven't, and they're starting to get stories that they're playing off of called inflation. Now, we look at what we're seeing here, narrowness coming into the palladium market. It is the weakest of the metals other than copper. The others are trying to show the strength. Dollar index, beaten up. I was looking for better support at the lower Bollinger Band. You have an embedded reading. Every system I have is still bearish on the dollar index. So you look at it all and you go, wow, what a day. Now, you can see the stock market a little bit weaker tonight. So what? I don't know what's going to happen when President Trump talks tomorrow and other cabinet members. And then we have his keynote speech on Friday. Enjoy yourself. That's all I can say. I'll be writing about all this, and how you get access to so much of what we have is all contained in our futures trading kit. Now, if you saw, I made it look like a DVD. It's not. You're going to get a link to it from us by email. Works anywhere you've got. Just open it up. All these different parts are in it. But what you want to get your hands on are our trading software, my research, and a lot of the Linn research. How do you do and get this? It's really simple. Give us a call, 866-973-2077. You can go to our website at www.iraepstein.com. You can click up here if you'd like. If you're watching me on YouTube, it'll take you right to the form. Or underneath us, it says click here for Ira's free info. As you can see, that was the little DVD that we had, but it's not. It's going to be a link. With that, I'm Ira Epstein. You have a good night, and I'll see you tomorrow.